Welcome traders to the Polaris Trading Group PTG University Indicator Review. Today's indicator we'll take a look at it as the DMI Ratio, also known as the Directional Movement Index. And the DMI Ratio measures the underlying buying and selling pressure and early trend direction development that is not always apparent on the surface. Based on Wells Wilder's ADX DMI, our version is an intuitive enhancement which displays the direct correlation of price strength-weakness as a traditional oscillator, giving overbought and oversold readings. The indicator plots a positive plus DI line, that's the directional index line, measuring buying pressure, and a negative minus DI line, measuring selling pressure. The DMI pattern is bullish as long as the plus DI line is above the minus DI line. Let's take a look at a chart and see what we're talking about. Okay, so on this chart we have a 5-minute E-mini S&P, and the two indicators down below here, the furthest one down is the traditional DMI index, the ADX DMI, and the PTG DMI ratio plotted as a traditional oscillator in the top sub-window. So on the traditional DMI indicator, you can see that the buying pressure, the plus DI line, the green, and the minus DI line, the red, are plotted in such a way where if the plus DI line is above the minus DI line, that indicates net buying pressure. And then when the minus DI line crosses above the plus DI line, it measures net on balance selling pressure. But as you can see here in this indicator, the problem that most traders run into with this particular version, the original version, is that when the selling pressure increases, it's kind of intuitive. The price actually is trading lower, yet the minus DI line, which indicates selling pressure, is increasing. So it's a little bit counterintuitive to what most oscillators and traders traditionally like to view the market with from that particular lens. What we've done is simply take a very, very good strong indicator that Wells Wilder created, simply rearranged it for our version to more intuitively match what the underlying price and directional movement is doing here. And by doing so, the traders have a higher correlation relationship in what the price and the indicator is actually reading. So let's just take a look here. You can see here price made a double bottom and started moving higher. That was confirmed by the directional movement, so the plus DI line on both indicators is moving north of the zero line, and that is in agreement. So the plus DI line showing buying pressure is above the minus DI line, and hence, hence buying pressure ensues. The problem comes in when there is selling pressure coming in, and the trader is looking at lowering prices, okay, yet the DI minus DI line is increasing. A little counterintuitive. So what we've done is, again, switch that around, and so it clearly matches when the price is finding some directional movement to the sell side. Okay, you can actually see that developing on the indicator well in advance, whereas on the original version you see a lot of crossing back and forth, back and forth, back and forth, which gets a bit confusing at times unless the trader is really astute at reading the ADX DMI. So again, all what we've done here is make it a little bit more intuitive for the trader to view, and we've also added actual overbought and oversold oscillator lines. So when the price reaches a peak extreme, okay, the actual indicator shows by some mathematical calculations that the price is actually has hit an extreme, and at least at that point the trader knows not to go chase the price on the buy side, let the price come back into a more favorable level. As well, on the sell side, price hits an extreme to the downside, again giving the trader an opportunity that, one, if he's short, he can use that extreme indication to cover shorts, and if he is looking to buy dips, looking to get to those extreme conditions in order for a counter trend type trade. This is a market improvement over the original indicator, which does not really show overbought and oversold, so it's very difficult for the trader to determine whether or not the readings that the original ADX DMI is showing, whether or not that's a true overbought or oversold condition. So our version adds those extreme levels, those statistical extreme levels, whereby giving our traders the confidence to take trades at the edges and have more consistent trading opportunities. Okay, so that's the end of the DMI ratio. Hope you've enjoyed it, and we'll see everybody at the next indicator update. Good trading, everybody.